Hey everyone, this is the Trader Investor. In today's video, I want to talk about market pressure to the downside and whether we should panic or not, right? I always teach no fear, no greed, so we should never panic. The reason why I just said should we panic or not is it was just a rhetorical question, right? We should never panic. Why we should not panic is two reasons. Why? One, if we trade without fear, we know what the markets are about to do, we anticipate what they could do, and we take action accordingly. When we don't have any fear, we place our trades at an optimal time and not just willy-nilly any place, right? So what I mean by that is when the markets were having this run up, did you buy at the top here, right? If you buy at the top, this is where you would panic, because this is not a logical place to enter a trade. This is definitely not a logical place to enter a trade. Now, you could say, when I break these highs, I enter a trade, but again, that's not really a logical place, because we need some good pullback to show us that, especially when we're going into all-time high territories. I'm always cautious, right? We make an all-time high and we have a tendency to wait a little bit and come back down. Not always, not guaranteed 100% of the time, but those things happen. So I'm a little bit more cautious when I see those things happen. And what I want to see is an interesting enough pullback for an entry, right? If, here are the highs. There was no real pullback to any significant value, right? So the pullback was not deep enough. And as it starts to go up, now we see some significant pullback. So then, as you see, we have broke the 23.6, the 38.2% retracements. In 2 trading days, we broke them, and we are staying above the 50% retracement. Unless we break the 78.6, for me, we are still in an uptrend. This trend is still intact. So, if we know this, there's no fear. Now, where do we enter? Where is the logical place to enter? And this is where being prepared ahead of time comes into the picture. Being prepared ahead of time. So, when price pushes up, my Fibonacci is always drawn after a new high is made, after a retracement. So here's the first retracement below 23.6%. If it goes to 38.2 or below, this retracement is done for me, and I start a new one from that swing. And from this swing, there was nothing below the, every time as you go up, if you look at the red line, nothing broke that red line. And here's the high. And now we broke that 23.6. We broke the 38.2, the 50%, the 61.8%, the 78.6%. Now, when I see this is done, right? This uptrend is done. We're in a downtrend. We've made equal lows. But as we are coming down, this is where we have significant entries. We find demand zones, right? And I drew the demand zones. When price comes down to the demand zone, I sell one cash covered put. I only do one because it's at the top here. When it comes down to a new level, this is where I sell my second one. Right? When price came down here, I sell my second one. Price, came down, pushed up. So I thought maybe if it continues to push up, I don't add, but that's okay. It comes down here, it gives me another position to add. Then we just, broke away from that for a little bit, but then we broke that demand zone, right? So every demand zone that is taken care of is removed. Every demand zone taken care of is removed. We slice through it, and the next demand zone was down here, we went down there, this is where we add another one, 3. And you can keep adding based on your account size, right? If you're only doing one, then you're sitting in this position waiting for price to reverse. I don't panic because I'm okay to get exercised in this cash covered put. That's why I keep adding them on the way down, because the premium is more expensive. I want to collect the highest amount. That's the purpose, right? On the way down, we collect more premium. On the way up, premium is low, so I don't like to play it on the way up. So this is why I take a chance. Take one at this level, take another one when we come to the next level, take another one down here, and then we got this equal lows, take another one. 4 positions, solid. If we don't reverse and all 4 gets assigned, it's okay, because our expectation is the broader market in the long term, in the long run, is bullish anyway. So we patiently wait and we capture upward gains with the call positions as price goes up. And I'll make another video when we start to go there. So the main purpose of this video is we do not panic, we have a plan in place, right? So for me, my plan is as price comes to levels of interest, right, very good areas of value which I identify as strong support resistance, demand zone, supply zone, or trend lines, right? So as price comes to a trend line, to a 50% retracement, this was a confluence area to add a position, and it also aligned with the demand zone that I removed earlier. So all these 3 things align. That's a good entry for me. I'm okay to enter on the downside, like I said, because my long-term expectation is up, right? This is just momentary. And the more we add on the way down, the lower our cost is, right? So total cost basis, we keep lowering it down, and on the reverse side, we start to capture those gains. So that's why. No fear, we can enter. No greed, we can enter. And now to add to whoever is paying us, to add to their pain, right, we draw Fibonacci retracements. This is taken care of because it went to 38%. We draw the next one, 38%. So we keep doing this until that retracement is broken. So here we comes to 38, and this is where we're playing around now. We're playing around this level, right? I can remove this other retracement here because we've already got down below 78.6%. So here on the way down is where we capture, right? So is where we capture all those gains on the way down. So as we see break of structure, high, low, lower high, lower low, as we see break of structure, we have our Fibonacci, and price did not go above the 78.6 retracement. For me, that's a downside. So this is where I take a put position. Target here, that 27.2, negative 0.272, and negative 0.618 are our targets. So boom, 2 hours we get a target 1. If we are patient, we get, target 2 the next day, or we don't take that position, we just exit out of everything as we see price retrace, because we could potentially reverse on you. So it depends on what you want to do. For me, target 1, target 2, target 3, I skip target 2 because that's not what most people do, but for me, I take the rest of my position off when price decides not to continue to go down. So you take now you're on the buying side, right? But you're on the buying side because you're protecting your position. You collect a lot of premium when price comes to an area of value. You use partial of that premium to capture more to the downside, and then you repeat the cycle because now you're playing with gains and the initial premium is still there. And so when you come to the next area of value, you capture more premium. You play this game again and again. This keeps repeating. 1, 2, 3, The fourth one I'm not taking. Usually I take them 3 times, especially on the way down. The fourth one I'm not taking. So right now, here's the one that I took, here's the second one, here's the third one. So 1, 2, 3, and from here I'm expecting price to reverse. We are at a good area of value. I'm expecting price to reverse. Anything could happen. Anything could happen. I don't predict. I don't enter position based on prediction. Anything could happen. But the main thing is, on the way down, we capture premium. We use a portion of that premium to get more gains to our account. If price reverses, that's okay, because we still captured premium. You capture 450, you use 120, you still have 330 remaining that is still sitting in your account. And those give you a significant gain. The next time around, you're only playing with your gains. Down, gain, down, gain. So every time you set your exit, properly, meaning fib levels are my exit, right? Failed at the 50% pin bar, you enter at the open here. I wouldn't risk the pin bar because it has to close for it first. So at the open of this pin bar, 162 to 157 is your target 1, target 2, target 3. This one you can go all the way because nothing reversed, right? Every bar keeps making a lower high, no bar reversed until we got to yesterday. Yesterday is when we started to see a small reversal, but target 1, 2, 3 hit, you exit your position. Now you're fully playing with house money, right? Don't get a little crazy idea that it's house money, you can gamble it. No, it's in my account, it's my money. But I say house money because I have used that money now to generate more income for me. So here, retracement to the 38.6, and today was one of those days where it got rejected multiple times. 1, 2 bars, almost 3 bars got rejected. Today it opened, tried to push up, immediately rejected. Right, so here's another entry for you. Boom. This is how we play it. This is how we play the Fibonacci's. This is how we play without fear, without greed. I say without greed because your exit. If you know your exit, you have no greed. Friday is also an exit for me. Today, we tried to push. We didn't manage to push any lower. I'm not holding through weekends. You always hear me say geopolitical reasons that I have zero control over. I don't want to sit through that over the weekend. Anything could happen. Friday, I close my position. It's a profitable position. I got to capture all these premiums. No loss, right? And it's not about the no loss part. There's always going to be some losses. The point is, because this is a gain, why give it back? Take your position on Friday before close of markets. Alright everyone, this has been the lesson today. No fear, because you know area of value. This is where you're entering. Take care for now, and I'll see you in the next video.